Joining me now with his take on the markets is Barry James. He's president and portfolio manager at James Investment Research. I think you have a very different investment style, but you are both still stock pickers, Barry, you and Kathy. So could you just quickly respond to her point as we sort of set up the stocks that you do like here? What do you make about her points on deflation?
Well, if I look at the Fed's, what they look at in terms of inflation, the PCE is pretty high, but there is another version of it that the Dallas Fed puts out, and it is not very high. It's only in the 2% range. So maybe we don't have it quite as bad as might be imagined. As far as deflation goes, we're not real sure about that because we see the economy is really coming along. We talked about previously this two-headed dragon hung from China, and one was COVID and the other side was the Fed. And the COVID side is going to sleep here and around the globe. And that's very important when it comes to what you invest in, because reopening is going to be on its way. And that's probably going to be a real positive, even as we see other things like supply lines and so forth open up.
Yeah. So you have a couple of names, 3 names in particular here that you think are a good opportunity for people to own right now. What are they?
Right. Nova Limited, if you make a semiconductor, you have to have equipment that monitors the process and measures things. That's what it does. It's small. And again, when you get into a reopening, small value companies are the right way to go. And so we think you ought to be building there. So that one, it fits that bill. Great earnings and great prospects, and they're really opening up wider and wider. Another in the small category in the energy area is Matador, more Permian Basin, very well-run company. Great, free cash flow and revenues and low debt. It's got all of those things. And then Fifth Third, I know there's been a lot of talk about, maybe these guys can't afford the people that they hire. But Fifth Third's really smart in what they've done, moving out of the Midwest down into the Southeast. But even better than that, if you look at their loan portfolio, lots of floating rate notes, which means as rates go higher, guess what? They get paid more.
Absolutely. Give some parting thoughts on the market here more broadly, Barry. I mean, can people feel comfortable being long equities for the next, for the duration of the year?
I don't think they feel comfortable at all. Yeah. And that's that Fed head, of the dragon. It's biting all around. It hasn't hit anything yet, really. But we see the market really got into trouble when you went from 3 rate hikes to people expecting 4, 5, 6 rate hikes. And then all the stuff that's at the risk end of the scale has just been trashed. And so as we look at it, you got to stay with quality. And we think that, you don't want too much debt, especially as interest rates start to head back up again. And you want companies that have pricing power in spite of, any possibility of any deflationary pressures. You still have to have that. And so if you have those 3 things, you can fight what the Fed's doing. We think we're going to be okay. The Fed isn't going to go overboard because they know that that's, something that doesn't play. And as I read their report, I did not see a 0.5% rate hike in those minutes. Mm-hmm. So I think they're going to signal that if they really, really want to do that.